You're looking at your tax return and you're sitting there and wonder, why do I owe so much in taxes? And often there's a couple of reasons. One is you're either self-employed and you have self-employment income and you didn't realize that you have to pay that FICA at some point, that Social Security and Medicare tax at some point. But a lot of times what I see the most common is that we have clients that have investments, that have equities, and because they maybe changed from one company to another, or their financial advisor made some kind of decision for them, they ended up having taxable events that they didn't intend, right? They didn't actually see the money come out of their account. They simply moved it from one investment to another, and because it's equities, they had taxable events. And often those taxable events can be capital gains. And we have a few kinds of capital gains. We have the long term, we have it more than a year, we pay at the current capital gains rates, which aren't horrible, but we also have short-term capital gains, which are ordinary. And often there's kind of a disconnect from what our financial advisor is telling us to what the real tax impact is. Because while they kind of know at the very highest of levels, they really don't know down to your personal level what the impact is going to be to you. The other thing I often see is we have individuals who maybe have a rental property or oil rights or just maybe a business, and they're wondering, how do I translate this to cash? Having maybe a sale or something like that because I want the cash at this point in my life, but how do I also avoid taxes? And one strategy I would suggest, and again, this is something we would definitely go into some planning meetings about, but one thing I would kind of put on your brain to consider is there an opportunity to do an installment sale? Often, if we have some kind of business, if we can sell a portion of the business so that it's like over a couple of years, preferably at the end of 2025 for different reasons, but if we can somehow stretch the sales, so it's not all at one point, but stretch the payments over a period of time, there are some additional benefits to our current capital gains taxes that you can tap into multiple times by simply stretching the sale out rather than just doing it all at once. And so when we sit and plan, we would sit there and walk through those scenarios, see what it would look like, and evaluate. Do we want all the money up front and pay a little bit more tax to have access to those cash all at once, but then that access is diminished by the amount of taxes we're paying? Or can we have an opportunity to stretch it just a little over a finite amount of time and maybe tap into more money over the whole big picture of the sale and less taxes over the big picture of the sale? And so what I would encourage you to do is, as you're starting to even consider doing these things, don't sign the paperwork, right? As you're considering maybe entering into a sales agreement or entering into the initial steps of selling a business or things like that, or maybe making a big change up with your equities, or maybe changing different firms for who's managing your equities, I would suggest you reach out ahead of time to your CPA, reach out to us ahead of time, and let's have some discussions over what that impact is really going to mean beyond just kind of the theory, right? Let's actually whittle down into some numbers. So if this sounds like something that you want to explore further, what I would suggest is you go to our website, make an appointment to be with us, or give us a call, or send us an email, and let's get on our schedule. Let's plan some time together to really kind of dive into some of the details as to mathematically, what are we really talking about from a numbers perspective versus just that kind of big picture concept that maybe your financial advisor is proposing to you.